Originally, when you said you saw a financial advisor in those early years and you're investing the money into it, we might have some listeners out there who go, "Oh, I've got a financial advisor," and they seem to be doing well, but I don't really know what they physically do. So, what you when you said that you looked at the statements and you looked at the money that had been missing uh, or lost in what they were doing, like what was you originally guided by those people? Like, did they say, right, you need to invest in this particular fund, just so that if anyone's listening, going,
Yeah,
I've
yeah.
got a financial advisor. That's something similar that they've said to me. I can now explore something with you and what you do and some of the courses and some of the books
Yeah.
just to go, I want to be a bit more educated. When I do speak to them, I can challenge on what they're doing.
Yeah, yeah. So the first thing you need to check is the management fee that they are charging. Okay, what kind of management fee are they charging for their work? Usually, this is around 1% of your assets under management. So, for example, if your portfolio is, let's say, 1 million or 100,000 pounds, they are charging you 1% of that every single year. Okay, so let me give you a very practical example. If you have a portfolio valued at 1 million pounds, and if they charge 1%, this is 10,000 pounds per year, okay? But just in the first year,
Mm.
because from then on, this money, this fee that is being taken from you is not invested, okay? And over the course of the next, let's say, 30 years, this amounts to approximately 80,000 pounds. So
Right, yeah.
10,000 fee over the course of the next 30 years, if you just take 7 or 8% annual growth of your portfolio, this fee at the end accounts for 80,000 pounds. So this is the true cost of the 10,000 fee over the course of 30 years. But when you account for all the next years of fees, altogether, you will be basically paying your financial advisor more than 1.2 million pounds over that time. If you just take all the fees and compound them over the 30 year period. So the first thing, and this, if you just think about it, this is like 2 to 5 years of hard work. If you make 500,000 pounds per year, for example, in your income, this means that your hour is worth 250 pounds. So, and if you divide 1.2 million divided by 250, this is basically 2 years of hard work, every day. So you are paying 2 years of 2 years of hard work just to pay off the fees for your financial advisor. And this is something that nobody is talking about in the financial industry because it's not in their interest. Fees compound, and over the long time period, it's really terrible for people, for investors. So
It's
the first thing I would ask is, what is the management fee that I'm paying you? And the second thing that you should ask is, into what products are you investing my money? So, for example, if he or she is investing your money in mutual funds or in any fund that has management fee, that is, so these management fees are separate. Okay, so the first management fee is his management fee. Then the second management fee is the product management fee. So, for example, if he is investing in a fund that charges 1% or 2% management fee, this is on top of his fees. And both fees combined, if you paid 1.2 million over the course of 30 years, now it's like 3 or 4 million. That's crazy.
scary.
Yeah.
Yeah.
So this is something that you should ask. First his management fee and that he's charging personally, and then the second management fee, the product management fee. What kind of products does he have in your portfolio? Let me give you one example that will really, hit the nail here. Um, Recently, my youngest son's teacher invited me to his class to give a presentation about my book, The Billion Dollar Decision. And it was a wild bunch of 10-year-olds. But after the presentation, I gave them my book, and also the teacher took one, a copy. And 3 months after that, the teacher writes me an email, and he says, I read your book, and I realized that I also have a financial advisor, somewhere in Asia. I'm from Slovenia, but my son's teacher is from the UK. He's an expat living here in Slovenia. And he has a financial advisor in Asia that is managing his investments. And he said, I realized that when I started to dive deep into the reports, I realized that most of my returns are being taken away through the fees, the commissions and fees that he's charging. And then he sent me the reports. And when I took a look, I found out that in the last 2 years alone, the market went up 40%. So if you just invested in a simple index fund, tracking global equities, global stocks, you would have 40% gain in the last 2 years. His net return was zero in the last 2 years because of the poor choice of investment products and because of all these fees. So basically, so let me, just imagine if you have a 100,000 pound portfolio, and if your net return in the last 2 years is zero, basically you lost 40,000 pounds.
Yeah.
Just because you trusted this guy, And this is something that is the reason why I wrote the book. That is the reason why I'm doing all these things, because people are losing a ton of money without even knowing it.